Welcome to Factful Finance. Have you ever felt overwhelmed by the idea of managing your investments or planning for retirement? You're not alone. In fact, according to a recent study, 57% of Americans admit they don't feel confident in making investment decisions. But what if there was a way to make investing easier, more efficient, and less stressful? Enter the robo-advisor. In this video, we'll dive into what a robo-advisor is, how it works, and how it could be the game changer in your investment strategy. Stick with me. First things first. A robo-advisor is essentially an automated platform that provides financial advice and manages investments for you. No need to hire a human advisor. These services use algorithms to create and manage a personalized portfolio based on your financial goals and risk tolerance. Now you might be thinking, sounds too good to be true, right? But let's break it down. How does it work? Robo-advisors are designed to be incredibly user-friendly. After completing an online questionnaire that asks about your goals, time horizon, and risk preferences, the algorithm uses that data to craft a diversified portfolio for you. From there, it will automatically manage your investments, rebalancing, reinvesting dividends, and even tax loss harvesting, all with little to no input from you. It's an efficient and cost-effective way to invest, because robo-advisors typically charge lower fees than traditional financial advisors, sometimes as low as 0.25% per year. This can make a big difference over time. Imagine saving hundreds, if not thousands of dollars, just by opting for a robo-advisor over a traditional advisor. Real-world example. Let's consider Alex, who's just starting to invest. With a busy job and little time to dive into the complexities of the market, Alex chooses a robo-advisor. After filling out a quick questionnaire about his retirement goals, risk tolerance, and timeline, the robo-advisor sets up a portfolio of low-cost index funds. A year later, Alex sees that his portfolio has grown by 7%, thanks to the robo-advisor's automatic rebalancing and tax optimization strategies. Why should you consider a robo-advisor? If you're looking for a hands-off approach to investing, a robo-advisor could be perfect for you. They offer simplicity, cost-effectiveness, and automatic rebalancing, making them ideal for beginners or anyone who wants to save time on investment management. But even for seasoned investors, robo-advisors can offer a great alternative when you're looking for a low-maintenance way to invest. Plus, many robo-advisors integrate with other financial planning tools, so you can manage everything from a single dashboard. Now, it's important to remember that while robo-advisors are efficient, they aren't foolproof. You should still review your investments periodically to ensure your goals haven't changed and your portfolio still aligns with your needs. Before you jump in, here's a quick disclaimer. This video is for educational purposes only. For personalized advice, be sure to consult a professional. Conclusion. So, what's the first step you'll take toward making your money work for you? Maybe it's time to explore a robo-advisor as part of your investment strategy. Let us know in the comments. Thanks for tuning in to Factful Finance. If you found this video helpful, don't forget to like, subscribe, and hit the bell so you never miss out on more insightful finance content. See you in the next video.